It's a pleasing time to report back to you on Q4 2025 results for the Northstar Global Flexible Fund, but I'm actually just going to discuss the entire year because it was an interesting one. But it is pleasing because the fund actually turned 10 years old 6 days ago, and this fund has seen all kinds of cycles over that period in the markets, and we'll discuss that later. Just in terms of the performance, we had a really good year, and I'll detail the performance later in this discussion, but we had a very good year. The clients did really well in the fund, and it benefited from an extremely strong year for equities. So the main feature of 2025 was the weak dollar, and it led to parts of the market outside the US doing really well. Europe, mid-30s performance, same thing from emerging markets. Japan had a strong year, and the US was actually a laggard, sub 20% returns in dollars. The currency played a big role in that. Bonds had a good year. The GLAG did about 8%, despite all the noise around an impending bond kind of collapse that we heard at the beginning of 2025. And the real feature for the year, commodities, precious metals, gold up 65. Against that, some of the other commodities, oil down around 20% for the year. So not homogeneous returns coming from commodities. Just in terms of the actual underlying performance of the fund, the equity component of the Northstar Global Flexible Fund did about 24% against the market around about 22%, so we beat the market about 2%, and we did 17.5% returns in total for the fund, including the fixed income, then the whole fund, and against the peer group was just over 12%. So really good year. Just looking back at performance over time, the fund is top 20% of managers globally last year. So not South African managers, global managers, the big guys out there. So we did a top 20% last year, top 20% over 3 years, top 20% over 5 years, top 10% over 7 years, top 10% since inception. So it's really outstanding performance through a long period of time now. Big features for us that we're quite proud of. Wasn't a IT-centric fund, a tech-centric fund. In fact, we really didn't rely on the Mag 7. Out of our top best performing stocks last year, 2 were from China, 1 was from Europe, and the fund didn't look like the geography of the MSCI or country. In fact, we're underweight US, overweight Europe, so very different. So the fund really is quite different to the average fund that you see out there that's US centric. Last few features really is that we've been through years and years of different cycles: growth, quality, value. Oil bolted 1 year, then it was tech for a few years. This fund has managed to move through all those cycles with a bottom-up valuation driven approach, where quality, not at any price, quality value is what drives its returns, and we have delivered one of the top performing funds globally for a decade. So moving ahead, the year ahead, buy list, our equity buy list has mid-teen returns, so we're at about 65% in equities. We see bonds delivering kind of single-digit returns, so we've got some fixed income in the fund. We're going to keep on just doing what we do, head down, lots of research, very structured process, anyone that knows us, and we're looking forward to the next decade. We think we're going to do very well and deliver the same result again for our clients.